Welcome to Investing with Stef YouTube channel. So today this is the series of the 4 M's of investing, and today we're going to talk about management and how to determine what a good management team does and how to determine what bad management does and what to look for when it comes to bad management. Hi everybody, my name is Stefan, and in this videos we talk all about investing. We give you the information to be a better investor, or maybe even just to start investing. So the first thing we are going to look for when it comes to management is, why is management so crucial? Management is obviously the life source of a company. They determine where money will go to grow the company. They will determine what type of people will work for you. They are the most crucial part of any company. So obviously you want to look at a good company first, right? And then you want to determine if management can run this company, because this company will keep on going for 50, 60, maybe even 100 years, and the management will change all the time. So we need to stay on top of what good management does and what bad management is, and so that we can determine if this company will generate more cash flow for us in the future. So the first thing we want to look for in management is, are the founders of the company part of the management team? Why? Because they will likely be incredibly passionate to invest their time in this company. They don't want to wake up in the morning to go to work because they have to. They want to go to work because they founded this company. And Warren Buffett says it well. He says that he doesn't even want to sign a contract with the management, because a paper, he's not going to persuade his wife in the morning to stand up to say, oh, I signed this paper, that's why I need to go to work. No, he wants to go to work because he likes to go to work at the end of the day, and a paper won't keep him there. So yeah, that is just a fascinating thing to know, that that management is far more likely to succeed because they want to, not because they have to. Do they own shares in the company? What does that mean? Do they own the physical paper, the shares of the company? Are they investing some of their own money in the company? That's what you want to look for in good. If they earn $4 million and they only have $50 million invested in this company, that should be a red flag for you when it comes to management. Are the management team part of the board of directors? What is the board of directors? They will eventually choose the right management. They will eventually have a big influence. They are a separate part of the company. Board of directors are independent people from all around the world that decide who the management will be, decide what the management decisions look like through the year, and if they should stay on or not. So board of directors are crucial part to make sure that the founders or the management is not overtaking the board, because then they will do all the good things to make them stay in power. So make sure that the management team is doing things with integrity. And now, are they managing debt? This is what you want to look for in companies with great management. Do they have little debt in the company? I mean, downturns in the economy happens fairly fast, but when it happens, there's no time to backtrack and to say, oh, I've got all this debt, let's just get rid of the debt. You can't get rid of debt just like that. So you want to look at companies with very little debt. That is a sign of great management. Why? Because if they are adding size but not return. So the way that they add debt to the company is where they would buy other companies all the time just to grow the company, but the returns of the company is not growing. It's just staying stagnated with what it was last year. So the reason why they would add more things to the company is because their salary is tied to adding to growing the company bigger. So make sure that the company is growing, but also the returns of the investment that they deployed is going up. A great way to determine debt in a company is to make sure that there are 2 to 3 years of owner's earnings, or free cash flow or earnings of the company that can cover the debt. So if let's say, for example, the owner earnings is 100, right, and the debt is 300, that is a sign of a great company, because in 3 years it can pay off the debt with the owner's earnings. You get good debt and bad debt. However, just make sure that the debt is not too large for them to handle. And there are great ways to do that as well, but this is just the entry level of management. The third and final way is, do the management have trust and integrity? There are ways to look at the management if they have trust and integrity, and that is by looking at the past career of this manager. You want to go to social media, look at all the social media on this manager. You can Google, obviously. You can look at the previous company. How did he operate the previous company? Was it with integrity? Was he fired from that company? Anything in that line. You can even look at his public presence. These are great ways to look at a company and the management that is running that company. And then you can look at the CEO letters. This is a crucial part when it comes to managers, because every year they will write an annual letter to the shareholders. And in this annual letter, sometimes there is a lot of bullshit happening. They will lie to the shareholders, and Warren Buffett says it great. He says that if they would lie in public, they will definitely lie to themselves in private. So don't let a company or a CEO only write the good things about that company. A whole year, there must be some bad things through that year. And if they don't write any challenges, any bad thing, there has to be some candor when it comes to annual letters. A great book to read is Investing Between the Lines by Lauren Rittenhouse. This book helped me a lot to understand what to look for in a company's annual letters. You first want to see if there's any candor, any openness, any negativity and positivity in the letter. And there's a great ranking system in this book. If you're into reading annual letters, this is a great book to start to help you to determine. Go ahead and like the video. I would really appreciate that. It will help me make more videos and with the algorithm. We're also trying to reach 10,000 subscribers before the end of the year, so please jump on board so that we can get this to as many people as possible. Now, these are things to look for in a good management and what they do. Now, the next one I'm going to look for is how to spot bad management. How to spot bad management is really crucial, and the way you do that is you look at annual letters of the company. You look at the 10K. That is a filing that they have. Every public company has to do. You also look at you listen to the annual calls. They do a call where some of the best analysts will call in, and they will ask these management questions. And then also you can look at the proxy statement that gives you the management's pay, and they have to document that as well. So where to look for these things? Let me give you an example. I always use Coca-Cola as my example. So you can go to Coca-Cola's website and you just go to investors. You can go to any company's website. You go to investors, any public company. You go to investors, and when you click on investors, this one will open. And then if this opens, you can see the next earnings call is going to be in April 19th. So this was done in 2021. So you will see on April 19th, 2021, they will have their webcast, and you can listen to it for free. So, and if you are into a company, that is definitely what you want to do. You can see all year on top. Let me move myself. Year on top, you can see everything about a company and everything that you need to know as a shareholder in that company. Where do you find the 10K? You go to filings and reports or wherever, and you just look for 10K. You download the 10K, and it looks something like this. It's an interesting piece of paper that you can read. I mean, Coca-Cola is a massive business, so they have a massive 10K, but you can't see it right now. But here it says business, and in the business section, it will say everything about that company. Read through it and try to understand what this company is about and what the management say about the company. Just go back to the PowerPoint. There you go. So how to spot bad management? First, If pays go up and size of a business or with the size of the business, management, what they like to do is they buy companies, they grow the company just to get a bigger salary. And the returns stay the same. So make sure that if the company grows and the management's salary goes up, that is a red flag for bad management. Little money invested in the company. They earn 4 million, they have 50,000 in a company. That is a no-no. Why? Because they don't believe in the future value of this company. They don't believe this company will succeed in the future. Why would you want to do that? If you work at a company, you like the company, you believe in the company, why would you not want to go and invest in the company, have some skin in the game? If management sells the company shares for less than it's worth, they go in public saying that, oh, our company is undervalued, you should invest in our company, let's say at $1. Now they need money in the company, and they put it out there for new shareholders at 75 cents. That doesn't make sense. So many times they would do that just to get some more cash into the company, and they'll sell the shares for less than what it's worth. And then on those annual reports, if they write a lot about EBITDA, it's called earnings before interest, tax, depreciation, and amortization. Now this is the biggest bullshit. If they always focus on these type of things, then you understand that that is not the bottom line of the company. That is before all these expenses comes out. So, and they try to tell people investing in a company that the company is doing well, but in the meantime they are not doing so well, and people fall for it. So these are the type of red flags that you want to find and that you want to analyze in a company before you invest in it. If you find some of these things, make sure to double check it before you invest in a company. And also, yeah, if you have any questions, please go ahead and put it down below. I would really like to answer them and want to get your take on what you think about good and bad management in a company. This is the end of the video, so please go ahead, like, subscribe, let me know what you think about the video. I really appreciate it. And the next one we're gonna delve into is the margin of safety. So stay tuned for that video, and I'll see you in the next video. Have a good day. Bye.